Interest rates have now started dropping, and the Federal Reserve has signaled that more interest rate cuts could be coming over the next year. Which leads to the question, should you refinance your mortgage now or wait for lower interest rates? Let's look at the potential benefits to doing it now versus waiting. So guys, this is the Fed fund rate going back 10 years. As you remember, COVID hit and they sent rates all the way back down to zero from where it pretty much was in the mid-teens. We had it flat for a while and then an absolute skyrocket. This is the interest rates that caused mortgages to go from, my wife got a low of 2.625% all the way to, I think, 7.75% or so on mortgage rates. Now, obviously, the Fed funds rate is going to be lower than mortgage rates because banks have to make a spread. But this is where rates have gone. And now we're seeing a little bit of a dip. And mortgage rates have gone from a high of 7.75% to the low to mid 6% range. We have absolutely zero clue. Anybody who says otherwise, you need to run away from. Does that mean you can't use history as kind of a guide? Well, maybe, maybe not. All I know is back here, I was willing to bet we probably weren't going to be at these low rates forever. And back in the early 80s, let me show you guys the 80s. Let's go to the max chart. If you were around here, you probably thought, well, this is probably high for history. These extremes, it's much easier to say the future is probably not going to be as bad as these extremes. But right now, we're kind of in a place where it's looking pretty average. But if you're a younger person who hasn't been in the workforce for a long time, this seems really, really high to you. But if you take an outward look, this is the same thing I talk about in our videos about the stock market values. People, if you're new to the market, you sit there and say, this is where markets should be. Well, based on history, it's not. Same thing here for interest rates. Just like back in 2003, when I started buying rental properties, I had 50 and 60-year-olds saying, well, Paul, just wait until rates are 10 to 15% again. Why? Because when they entered the market in their 20s and 30s, that's where rates were. So that recency bias of saying this is what they experienced, therefore this was a fluke, even though this was lower than history, this was not normal. So I want everybody to remember that. Now, the benefits of refinancing now are very simple. You lock in that rate for a long time. So if you're one of those people who bought a house or refinanced, I don't know who refinanced at 7.75, but if you bought a house because you needed to buy a house and you had no idea what rates were, so you're okay paying 7.5%, right now, if rates are 6.25% minus your 7.5%, you're saving 1.25% per year. 1.25%. Now, how valuable is that for you? Let me show you. If you have a $300,000 mortgage, and you refinance it, and let's keep it simple and saying you're saving that 1.25%, you are basically saving $3,750 per year, $300 per month. That isn't bad for a $300,000 mortgage, okay? Now, obviously when you refinance, you're gonna have costs. Let's say your costs are $5,000. Let me ask you a question. If I said to you every single year, you can invest $5,000 and get $3,750 back every single year for the next 30 years, would you do it? If your answer is anything but absolutely, let me go do that right now, I would question your financial abilities. This is a no-brainer to me. At what point does it not make sense? Guys, that's everybody's choice. The good news is this is a guaranteed return here. How many places can you get a guaranteed basically 80% return, 75% return on your money? Not very many places. Even if your costs are $15,000 to save $3,750, you're over a 20% return per year for the next 30 years. That's pretty incredible. But if you have to decide of the hassle of going through it, etc., I don't know. But guys, one of the best things about mortgage rates being high is you have a really good incentive of paying down those loans and refinancing when rates fall. That's the big incentive you have. Guys, I was very fortunate and locked in 4.25% on my home. And for a while there, I'm coming in some money soon that would allow me to just pay off my mortgage and not think about it. And for a while there, I was going to do that until something happened. Rates were high enough where my cash in my account was well above the 4.25%. So I was like, you know what? I shouldn't pay it off. But now rates are falling again. Maybe I do pay it off. It's a harder position for me to be in because I have such a good rate I don't want to get rid of. But if you're at such an obvious rate of 7 to 8% on your home, and you can now get 6.25 or so, even at 6.25 versus 7, it's something to consider. And the higher and higher mortgage amount you have, the cost as a percentage of that mortgage is going to be a lot lower. These are the things you need to calculate. Now, what are the benefits for waiting? Well, basically, I think the only benefit to waiting is, do you think rates are going to go down even further? And that's pure speculation. And again, no one has a clue where rates are going to go in the short run. Yes, the Fed has indicated that they're going to be cutting rates further. But you guys have seen from that last cycle how much things change. Some numbers came out last week that said the economy was booming, and everybody said, wait a second, maybe they're not going to cut rates like they thought they would. Remember, back in December of 2023, a mere 10 months ago, they estimated 7 rate cuts in 2024. We have had 1, and it occurred very recently. So we don't know what's going to happen. So really, one of the only benefits I can see to waiting is rates go even further, so it saves you some time. Now, the good news is, if you refinance right now, you can still refinance again in the future. You have the cost to incur, et cetera, so you have to wait for a bigger drop in rates. But I encourage you to sit there and decide for yourself what's more important to you. If you can get a savings of 50, 60, 70% of your money every single year, are you really excited to go wait for 80 or 90%? Lock in that 50 or 70% savings. And if rates go even further, you can still do it again in the future and save even more money. Now, guys, these are very basic things we discuss, but I like keeping things as simple as possible. That's what investing is. So if you like the idea of learning about real estate and investing in a very simple way, do me a favor. Like the video, subscribe to the channel, and comment below, because since this channel is young, I'm responding to all comments myself. You'll see me afterwards with the @PG, and let me know your thoughts on what you might do and your situation. And if you want to see our next video on how you can profit from lower interest rates, just make sure you keep watching. Thank you for your time.